probably should leave that in. Okay, good morning. It is Tuesday, October 16th, I think. I'm sorry, it's October 15th. My eyes are just old. I'm an old man. First off, I want some housekeeping here. I don't know if others noticed this, but in the Seeking Alpha app, trending news tab is gone. And so it was my number one thing to headline scroll in the trending tab. You'd kind of go down below your analyst recommendation. Then there was trending news. And I loved seeing what was trending because I could tell what was moving, blah, blah, blah. It's gone. So I wrote to Seeking Alpha. I don't have like Trendspider, I have a very close relationship. I don't have a super close relationship with Seeking Alpha. So I wrote to the standard support team, and to their credit, it's been 3 or 4 times I've written to them. They've gotten back to me super quickly. But they told me that they made some changes to the app and some of the modules, and they took the trending news tab out. But you can still get to the trending news by hitting news down at the bottom, and then you can hit trending news as the one that you want. So you can get to the articles. You just, it rather than headline read, but it's still there on the website. So the website, this trending news is what I'm talking about. You used to be able to just see the headlines, but in the app, you don't see it now. So it is what it is. It's gone, but it's still there. My guess is there's probably some changes coming. It's probably based on user data because as a former app developer, maintenance guy, product manager, you use data to do that stuff. And if you don't use data, you're just going to lose all your customers. So I didn't like it. I don't like it right now. I'm assuming something better is coming, but it's just the app, and as long as I can still get to it on the website, I'm fine because I go back and forth with my computer. So, by the way, we had a very good day yesterday. We continue the bull run. We continue with the Bollinger Bands on the Qs expanding out. We continue going to the all-time high of 503. In pre-market, it's flat. It's 497.40. You closed yesterday at 497.50. Again, this may be the dip that never comes. We may be in a dip that will never come in October. You don't know. There's certain dips in the market. We'll talk about oil. We'll talk about nuclear energy. We'll talk about DJT stock, how that's a grift, and his new coin. We'll talk about MicroStrategy and how it traded for 42 cents. Fear and Greed Index on CNN, CNN Fear and Greed Index. UBS expects the S&P to be at 6,200 by June of next year. Oil play, SoFi, SOXL play. We'll talk about CLS. Wolf got a huge amount of money from the Biden administration, and earnings, United Health, Bank of America, Goldman Sachs, Citigroup, Schwab, Shitty I should say, all super good. So we're going to go over that, but the equity put to call ratio has dropped to 4.44, the lowest since July 2023. This is the second lowest level since March of 2022. In other words, the appetite for hedging against a stock market decline is the lowest in years. This is despite October being the worst month for stocks on average during presidential election years. Meanwhile, the S&P has hit 45 all-time highs this year. The resilience of the market truly unremarkable. It's, again, that's why I'm 90. You can look at this as oh my God, he said he pulled out of the market. I pulled 5% out of the market. So it's a way of looking at the glass is half full versus half empty. I'm still fully invested in this market. And I will say this to everyone. Look right in the camera. Time in the market beats timing the market. You can play little dips and pull a little bit out, but we may never get the dip that I was expecting in October. That means I'm going to have to buy at a higher price. Am I worried about that? No. And the reason is because I'm still 90% invested. It's just a small amount of money that I'd pulled out, hoped to actually take some profits and buy at a lower price. I had the opportunity and I didn't do it. Remember, I pulled out at this point right about here where it was at the 200 day at about 456. 446 was the low. So I didn't time this one very well at all. At all. The algorithm said get out. I wound up pulling out some money, pulling out of some stocks, and then we soared. Okay? That's it. It's the nature of the game. Again, if you're going to beat the market, you got to play the market. And time in the market beats timing the market. So just realize the dip may never come. Goldman Sachs yesterday wrote a note that the market is currently 8% overvalued. But who cares? Literally, that was the headline. The market may be 8% overvalued, but who cares? You don't fight the Fed with easing. You don't lower your expectations on earnings, which beat on all the financials so far. And the 493 stocks outside of the Mag 7, okay, they're doing very well. So you don't fight that. We may never get the dip. Buying at a higher price, it's okay. It won't hurt you in the long term. But you want to buy the dip. Am I going to buy at 503? If it looks like we're going into, a huge bull run, yeah, I'm going to buy at 503. But am I going to pull out 5% if we start to dip a little bit more? Probably. This is how I manage my portfolio. It may not be the best. Maybe I'm not. I am definitely not the best asset manager. But it's worked for me. I'm retired. It is what it is. Nuclear energy. OKLO, OKLO, was up 10% yesterday in pre-market. Now it's up 5%. This article in particular, Google backs new small nuclear reactors to power their AI. This nuclear energy, if you want some nuclear energy stuff, they have SMR, which is new scale. This article has a bunch. And if you want, OKLO is Sam Altman backed, just so you know. That's Sam Altman backed company, OKLO, AKLO. They're not making money. Let's see how it's a buy from Wall Street. The valuation, not crazy, but they're not making money. The growth, they're not making money. The profitability, they're not making money. The momentum, it's been okay. 3-month performance up 16% since small nuclear energy got the pop. This is one of those YOLO kind of stocks. Now, when you look at Wall Street, 4 analysts cover this. They say it's a $10.83 stock that's a 7% upside. And you can see they just started covering it, and it's all over the place. So if you're going to invest in something like this, nano nuclear energy, this one has gone parabolic. Okay, it's all the way. The 52-week range. Get ready for this, because this just premiered back in May. And so the 52-week range, which isn't even 52 weeks, what's that, 4 months? Between $3.25 and $37.51. Today, you're trading at $17.59. In pre-market, you're up 1%. Nuclear energy is starting to make sense, but this one's not covered by the quant. So if we go over and look at the valuation, they're not making money. If we go and look at the growth, they're not making money. If we look at the profitability, they're not making money. You look at the momentum, 3-month performance, they're down 29%. So again, you can look at these kinds of things and find opportunities. VST, which is a crazy utility stock, this one was up 5% yesterday. Okay, we talked about this one. This was on my list of ones that if it pulled back 5%, I was going to buy it. It's just the valuation scares the F out of me. Okay, they're not making money. The forward PE is 23. That's not bad, but they're not making money. And then you look at their growth. They are losing 15% revenue year over year. But it's because of their levered cash flow. Okay, they're not doing as bad as the rest of the utilities. Profitability, 34% profit margin. The sector is 44%. I think there's better opportunities out there. But the number one thing is momentum. 1 year, you're up 318%. 9 months, you're up 237. 6 months, you're up 89. 3 months, you're up 44. It's getting slower. When you look at Wall Street, there's 14 analysts that cover this. What do they say it's worth? 136. You're at 132. In pre-market, you're at 134. Does that upside excite me? No, it doesn't. So, but they were up yesterday too. Now, biggest movers of the day, Trump, DJT surged 10%, reaching its highest point in over 2 months. Over the past 2 weeks, the company's shares have more than doubled, driven by increasing betting odds favoring Donald Trump in the upcoming November 5th election. The stock is a grift. His new coin is a grift. Don't think that this is anything more than just quote unquote hype. I want you to be careful in this stock because the rug pull could happen. He isn't selling his shares, and I believe him that he's not selling his shares because he's probably borrowing on those shares to actually live. Yes, he's a billionaire, but that's what they do. They borrow on their real estate. They borrow on other things in order to make their living. And I think Donald Trump is the same as all of the rest of them. And you're just up there at your 200 day. The algorithm makes you 114%. Buying and holding over 24 months on this makes you 70%. Okay. It's not an investment. This is simply a stock that goes up and down based on his presidential election and his crypto stuff. And that's what they announced yesterday. And I wrote this to a friend. They announced yesterday premium program on Truth Social, which you can get Truth Plus with. Okay. 1,000 titles. The majority, 99%, are available. I think it's on Pluto or one of those free ones. So they're charging people for Truth Social Plus for programming that's available for free. How? I don't know. I don't get it. I don't understand it. If we just look at DJT stock and we look at the financials, okay, revenue, 3.4 million. 3.4. There are Waffle House locations that make more money than this. Do not get sucked into this, but absolutely, if you want to, trade it. Just trade it on a short time frame. And I'm not making a political statement here. This is not a political statement. Donald Trump has grifted many people in his past. He will grift many people. The sneakers, half of his novelty stuff made in China. So, again, he's paying, I think, $4 for Bibles that he's selling for $60 or $80. And Ericsson junked following the Swedish telecom company's better than expected Q3 earnings. Biggest losers, one of them from yesterday. Etsy slipped as Goldman Sachs downgraded the online retailer from neutral to sell, citing a selective approach to e-commerce stocks ahead of earnings. So the movers are out there. You can still move. It's all still in there. Oh, I have this. Add to it that Donald Trump is going to grift again with his Bitcoin and his coin flying. Now, Coinbase was up huge yesterday. Coinbase up enormous. And how could you have traded this? Coinbase, the algorithm got you in here at 177. This should be on our watch list. It is on our watch list. Okay, we scanned it. It had an entry. It's definitely in the newsletter. Had an entry at 177 yesterday. Now, the MACD's a little bit high. Algorithm makes you 178%. But where would I have thought that you could trade this one better? It's in the 65-minute algorithm. Okay, the 65-minute algorithm over 8 months makes you 29%. Versus the actual asset making you 15% over the last 8 months. Now, it gets you in and out a lot. But it got you in at 169. You're at 196 today. The 169 buy was on October 11th at 1140. October 11th at 1140. That candle, it opened at 175. It closed at 178. Okay? You had an opportunity, it opened at 169. It closed at 175. So you had an opportunity to get this at about 170, and you're at 196 today. Look at the Bollinger Bands. They cinched up. You could have bought any time in here between 162. It was simply capitulated, and then boom, you get the Golden Cross. And you have the Golden Cross right now. Now in pre-market, let's see, you're down 1%. The one that I think you could do, CONL. This is double time. This is double daily, okay? October 11th, same time, 10:35, gets you in at $22. You're at $29 today. It's a huge gain. And again, you haven't crossed up on the Bollinger Band, but it looks exactly the same. You're trading at the top of the Bollinger Bands. The RSI completely overbought at $83. In pre-market, you're down 2%. Would I buy it here? Probably not. I'd probably wait for it. But again, with this algorithm, the 65-minute algorithm on Trendspider, it makes you 76% over the last 8 months. A lot of positions, 93 positions. But kudos to you if you want to trade on this one. If you're sitting there on like a Wednesday afternoon and you want to find something, you can scan on the 65-minute against the watch list, against the leveraged ETFs. and you can find something to trade. And more than likely, if the algorithm makes you money, more than likely you can win on it. And it's just about finding a strategy. And I give you those strategies when you sign up for Trendspider. And the Con L, it got you in October 11th. October 11th, Friday at $24. Again, you're at $29 today. This is the 4-hour algorithm. Makes you 386%. So you say you don't want to trade all that much in the 65-minute. Go to the 4-hour. Again, over 24 months, you make 386% versus 79% if you bought and held. How do you get this? Well, you go to Linktree, linktr.ee, and you go to Trendspider up here. Okay, it takes you to a pricing page. You pay for whichever plan that you want. The $53 is probably the one that you want to start out with if you're new to technical trading, but you've started on a free tool. Because if you haven't started on a free tool, my suggestion would be if it's in your budget, get the advanced. Why? Because they offer unlimited one-on-one training. You see it down here, unlimited one-on-one training. That's what it is. So if it's in your budget, get that one. If not, get the standard. You get my 4-hour algorithm. You get a leg up on everybody else who signs up for Trendspider. And this is absolutely the best price available. So the best price available is on that one. Okay. And it's simple. Again, things like that, Con-L, it just scans. Now, let's take a look at MicroStrategy. Can MicroStrategy reclaim its high from the dot bomb? This chart shows you bear market bottom back here in 2002. MicroStrategy was 42 cents. Today it's trading for 224. The dot-com bubble, it went up to 333. So 17% short interest in this. You could have a short squeeze. I don't know. Let's see MicroStrategy. Where is it on the 4-hour algorithm? Because I'm in this one. The 4-hour algorithm makes you 1,208% versus 788%. In pre-market, I think you're down a little bit. You're up 1.7. You're at 205. Yesterday's high, it was 227. 227. You're at 205 today. You closed at 201. The algorithm still has you in, even though it's outside those Bollinger Bands. Algorithm still has you in. RSI pulled down to 63. The MACD, super high. Am I selling? No. Probably should. But you just had the golden cross. Their earnings are coming up next week, I think it is. It's October 30th, so it's 2 weeks from now. So I like MicroStrategy. I like it. 42 cents. If I had this at 42 cents and it's now trading at $200, 20 years later, and I'd put like 10 grand into this, huge. So I like it. And if you want to know more about MicroStrategy, here, I'm going to post this one. Conversation offers a crash course on Bitcoin for investors and includes a detailed discussion of MicroStrategy's Bitcoin business model. It explores the growth opportunities of MicroStrategy, a leading public issuer of Bitcoin-backed securities. Again, MicroStrategy is a software company that basically uses its cash to buy Bitcoin. And Michael Saylor is the CEO. So if you want that, it's an interesting play. I don't think it's too long. But again, I'll post that one. Now, where are we in the market? We're at extreme greed. That's typically when you take profits. The U.S. election, 3 weeks away, and Fear and Greed Index is flashing extreme greed. The highest level since March 4th. Okay, we can go back and we can look at March 4th on SPY. And let's see where on March 4th this was. We can go back here. March 4th. Where were we? We were on our way up. And we continued up. You can see, even though it hit extreme greed, we continued up. But then you saw a nice little pullback. That's what I'm expecting now. And you can see SPY, same kind of thing. I don't expect it to pull back anytime soon, but I do expect something to happen. Whether Israel hits Iran, whether China blocks more of Taiwan, whatever they do. But the CNN Fear and Greed Index, it's real. It's at 78 out of 100. So be careful. Be careful. Don't add it. But S&P average returns after an election. So this is what we probably have to look at next year. And again, the year after elections, usually pretty good. But when you look by month, might not look that great until April. April and May are huge months, 2.38%, 2.26%, and then you have a July at 2.2%, and then you have November and December. So seasonally, it looks like next year's going to be a good year. And UBS expects us to hit 6,200 on the S&P by June of 2025. That means SPY would be at 620. You're at 584 right now. So if you want to be, again, you're buying at all-time highs, but if they expect the S&P to be at 6,200 by June of next year, you're making money. Even if you buy, Bob bought at the highs, and he was still able to retire a millionaire. So the key point is there's never a bad time to buy if you're in it for the long term. Time in the market beats timing the market. Now the odds are rising that this is a great opportunity because one of our scans today on the 4-hour algorithm is SCO. Odds are rising that Saudi Arabia may open the floodgates on oil production. You may have oil stocks, and you may see that oil stocks are down today. SCO is a triple leveraged bear ETF on the oil market. Okay? Algorithm got you in yesterday afternoon. If you had Trendspider, then you saw this. You could have scanned for it. You could have done it. But it had you in SCO at 1681. So if you're playing oil and you're like, hey, the MACD, it's well below the oscillator. The RSI, it's down here at 43. It's below 50. The last couple of times it's been like that, I've been able to make a lot of money here at 15 all the way up to 18. Well, where are you trading today? You're trading at 18.16 in pre-market. You're up 7.9%, and this is the reason. A large number of oil stocks are down. They're basically going to turn on the floodgates, and China's demand is low. So SCO is the play. UCO was the play a few weeks ago. SCO is the play right now. You can play those both back and forth together. And short sellers boost bets against energy stocks as prices fall. EQT, these are the most shorted S&P energy stocks. EQT, APA Corporation, Valero, VLO, Occidental Petroleum, Devon Energy. So do we have a short squeeze coming up? The least shorted stocks, Exxon, Marathon Oil, Phillips, Targa, ONEOK. So you've got a bunch of opportunities in the energy space because we may see that volatility. If you believe, like I do, that energy is going to actually go up and we're going to see some of these energy prices start to rise, because I do think they're being held down for the election, then I think that oil may be a good play for you. Might be a good play. SoFi, I've talked about this one so many times. I said it's a $10 stock. You know what it popped to yesterday? $10. $10. It's on, what is it? Let me see the news headline. After forging $2 billion loan platform agreement with Fortress. I have no idea what that means. I just read the headlines. I saw the stock. I have pointed this out before. That's a $10 stock, and it pops to that every now and then. Where does this top? It is right at $9.28, and you can see it pops to that green line right there is at $10. That green line is at $10. That's where I think it pops to, and then it pulls back. The Bollinger Bands are going wide open. The RSI is at 69. This is a weekly chart. Can it go higher? Absolutely it can go higher. But SoFi is an expensive stock. We talk about valuation all the time. The forward PE, 88. 88 is the forward. Right now, they're not making money. 88 is the forward PE. Their growth, phenomenal. 30% revenue growth year over year. That is great. Profitability, 82% gross profit margin. That's great. But they're levered free cash flow, they're not making money. Momentum, A+. 3-month performance, up 44%. 6 months, up 36%. 9 months, up 27%. 1 year, you're up 23%. That is phenomenal. So momentum is the most important point in the stock market. Now, Wall Street says it's a hold. The average, there's 17 analysts that cover this. The average Wall Street price, $8.73. Do I want to take a chance that it's going to go to 20? No. I want to make sure that I'm taking profits here because it's popped to 10 once, twice, 3 times. 3 times it's popped in the last year. that it's popped to 10 and pulled back to 7. You want to buy at 7. You want to buy 8. And then sit there and just hold it because it does these pops. Do I think it's getting back here to 23? Probably at some point in time. But you just got your 200-day. It is literally that red line right there, and you might not be able to see it, but if you had Trendspider, you could see it. It is literally pushing up against that 200-day, and that's where it is. So I want to just throw out some caution. Now, top crowded longs and shorts, overweight positioning, Jeffries, crowded longs, excluding NVIDIA because we know that one's crowded. Broadcom, Taiwan Semi, Advanced Micro, ASML, which actually reports earnings tomorrow, Marvell, ARM Holdings, Qualcomm, crowded shorts, excluding NVIDIA because we know NVIDIA is heavily shorted as well. Intel, Micron, ON Semi, ASML, AMD, Wolfspeed is a crowded short, and that's up 25% today. That we'll go over that one in a little bit. But this is the top semis. I still think SOXL is a great play. And I wrote it this weekend in the newsletter. I think it's a great play for the fourth quarter. There's a triple levered bull on the semiconductor industry. And I think it's a good play. Would have been better back here at about 32, and now you're at 40, 31 when the algorithm got you in. The algorithm got you in at 31. Okay, over the last 2 years, you make 456% in the algorithm. Why you're not getting the algorithm, I don't know. But I think this one plays well. Now, I've got a ton of semis. I don't own SOXL. I'm planning on getting it. It's just that bull run makes, I wish I would have gotten in this pullback back here at the beginning of October. I wish I would have gotten it down here on this trend line. Where does that trend line come from? Oh, it comes from the October 2022 lows with the 3 times that we pulled back. It comes from there. And that trend line touches once, twice, 3, 4, 5 times. And you use that trend line. I'm not concerned about it getting back up here. I'd love it to get to 70 where it double topped. It topped in the middle of July and it topped back here in 2021. If I buy at 40, I'd love it to get to 70. I still think it's a good play. Let's look. U.S. malls export caps on AI chips from NVIDIA, AMD to some nations. That's your downside. That's why when I look at SOXL, I'm like, I want to buy it. In pre-market, we're down 1%. I want to buy it, and I want to buy it when it's down. Okay, I'm using that trend line. I'm trying to get this. If you want to see that trend line, you want it. It's in the newsletter. It's in this paid newsletter. Course number 4 if you want to see it. Again, it's a way to support the podcast. But if you want to see that stuff, just subscribe. It's nice and easy. But the U.S. malls, that stuff. Now, some opportunities here. Why Celestica? I like this one. I like this stock. Celestica, this article goes over it. Okay? We can see it's a strong buy in the quant. Why is it a strong buy in the quant? We can see the valuation, not crazy. The growth, it's a C+. They're growing at 13% revenue growth year over year. It's not bad. Not bad at all. Their levered free cash flow growing at 28%. Profitability, it's got a 10% gross profit margin. That's a problem. That's a problem. They don't have pricing power, but the momentum, the most important portion that I would argue, 6% over 3 months, 41% over 6 months. It has had quite a run. This one has had quite a run. This is one that I would like to buy if it pulls back 5%. And I should have bought it when it did pull back 5% at 45. You're at 63 right now. The algorithm makes you 502%. If you bought and held this one, you made 600% over the last 24 months, 21 positions. But I like the entries into this. The entry into that 45, I absolutely should have bought it. You're about to get the golden cross. Do I think you could go up? Well, let's look at the what Wall Street says it's worth. Wall Street says it's worth 63.63. I'm not willing to take the chance that Wall Street, there's only 9 analysts that cover this. So take that with a little bit of a grain of salt. They kind of have chased this up. And when it pulled back here to 41, they kept it at 62. And all of a sudden you're at 63. I want to buy this one. I do. It's one that I want to buy. And that article goes over exactly why you should buy it before earnings. Now, Wolfspeed. There is no way I would have been in on this one. It is up 32%. after securing $1.5 billion in funding from the CHIPS Act and Apollo. This goes over it. The quant says this one's a strong sell. I would be very wary of actually owning this one. Trade it. That 32% today, if we just go in and we look at Wolf, and you know, we'll take a look at something like the 5 minute. We'll look at a 5 minute chart and we'll look at the after hours, okay? Look at that one. You could have bought it here. If you were up at 5 o'clock in the morning, you could have bought it at $12 because these are 5 minute candles. You had all the opportunity in the world. Even buying here at $14.26 after it pulled back. I probably would have gotten out when it started to pull back there and gotten nervous because if I bought at 12 and all of a sudden I'm up at 14 and I've got my 10%, I'm perfectly happy. I'm out. Now, it's still moving. Still, I would expect this one to pull back when the market opens at 9:30. It's 9:07 right now. But you can use 5 minute candles on Trendspider. Again, Wolves, all of this, I would trade this one. I would absolutely trade this. Now, let's talk about earnings. Bull run props up Q3 earnings season, but is the bar too low? This article is talking about a lot of stocks that may have already reported. Wall Street's bull market has entered its third year, climbing a total of 62%. The S&P bottomed out at 3,577 on October 12, 2022. Again, if you were lucky enough to time that bounce and you bought on October 12th, kudos to you. I started buying, again, probably October 26th, somewhere around there. I started loading back in there. Is the bar too low? With quarterly earnings seeming to be a good start, Christine Short noted in the third quarter results preview that the sell-side analysts have ratcheted down their estimates more than usual this earnings season. And yes, earnings are kind of, the banks are destroying earnings. Look at Bank of America up 3%, Goldman Sachs up 2%, SoFi up 4%. You can look at the bank earnings today. You know, United Health, they blew it away. Imagine beating your revenue by over $1 billion, and your stock is down 7.53%. And the reason is because they trimmed their guidance. So while the beat was very good in United Health, I would argue it's overpriced right now. I would argue that United Health needs to be closer to 500. It's trading at 550 right now. That's not a bad entry point, to be honest with you. The valuation of United Health at 550 is so much better than buying it at 600. But I will say that buying it under 500 would be even better. So am I going to get this one? The catalyst is over. I think your weekly, we looked at this weekly, United Health. The weekly MACD needs to be brought down. When the MACD gets brought down, and we can see this 450 once, twice, 3, 4 times it hit that 450. Okay, 4 times over the last couple of years, it has hit that 450 mark. Do I expect it to get down there? No, I expect it to get between 500 and 520, and that would be a target where I would enter. That's how you play this particular stock. It's a healthcare stock. If Trump gets in and they take away the Affordable Care Act, or they do something to medical plans, this one could get hurt. If they take back Medicare and Medicaid, this one could get hurt. I don't know much about it, but I do know 520 would be a good price point to put some money in to have some exposure to healthcare. And if you don't want United Health, just buy XLV. XLV is a good ETF. Now, you had your entry right here at 152. It's down 1% at 153. And it's because XLV has a heavy exposure to United Health. It's the largest managed care company. Let's see. I think it's one of the largest. Yeah, it's the second largest. Eli Lilly is your top. So, again, those are great companies. Great companies, both of them in the core portfolio. So I like that one. Now let's talk about bank earnings. Bank of America here. Bank of America earnings per share beats by 5 cents. Revenue beats by $70 million, up 3%. I said when Bank of America was under 40, I thought that was a great buy. Now Bank of America at $40.06, great buy. The algorithm makes you 71% in this stock. 71% over 24 months. What do you make if you bought and held 33%? It's only 24 trades, okay? 24 positions. You win 50% of the time. Under 40 was the play. That's a it's a great company, good earnings, good products, good management. Again, it's too big to fail, one of those ones. So you want a portion of this. And again, if you just want XLF, buy XLF. Goldman Sachs, the next bank that reported earnings beat fueled by market strength wealth management. They're up 3%. We can look at Goldman Sachs. Goldman Sachs, this one, I was pounding the table to buy it under 400 because the book value of this one was under 400. So in February when it got under 400, I said you should be buying this one. You're at 522 today. In pre-market, 537. The algorithm got you in here at 494. Okay, if we look at the weekly on this one, has it run? Yes, the MACD is just too high. The RSI is just too high. So I would wait a few days and then see where this one settles out. But if you can get this under 500, get Goldman Sachs under 500. Citigroup is another one. Shitty Group, as we call it. Shitty Walk on South Park. Shitty Group. Earnings per share of 151 beats by 20 cents. Revenue of 20.32 billion beats by 500 million. I've said this bank, their book value is $99. Okay? This one is up at 67. It's up almost 3% in pre-market. The algorithm got you in at $58. I said that was a screaming buy. At $58 with the MACD below the oscillator and the RSI at 38, screaming buy. Screaming buy. Now, you're going to be rewarded. Just be aware, there is a resistance up here at 69. Do you buy in here at 67? I don't think so. It doesn't make sense. Look at the weekly. The MACD has reset. If we get to that 69, I think then you trade between that $80 and $69 level. But Shitty Bank, I like the bank. It's not in the core portfolio because they still have problems. What was the one I was pounding the table on? Schwab. Q3 earnings beat fueled by asset gathering sweep cash growth. Again, Schwab. I said Schwab was a buy. I think somebody in the private Facebook group, why do you like Schwab? Schwab is a beaten down bank that is unnecessarily beaten down. They are doing very good things. It's, again, something like a shitty group, shitty bank, where they are just doing everything and they're firing on all cylinders. The algorithm, it makes you 54%. If you bought and held this one for 24 months, you lost 10%. If you traded 22 positions, you win 45% of the time. Your average win is 9.58%. It got you in here at $64. Now, it was questionable because the RSI was a little bit high at that point. RSI is super high right now at 73. Okay, and again, it's at $73. This is an $80 stock. At $80, you have some resistance. At 73, you're up 9% this morning. Let's take a look at the weekly. The weekly, the MACD, well below the oscillator. You're trading around the 200-day at 67. And like I said, this one at 86 right there, you're seeing. Right there, it poked through it. Didn't hold it as support. Went back above it, came back down, and then you pulled back there. I would be looking at probably 86. Right now, you're trading at 73. Maybe $80 might be a resistance level where if you're in this one, I might actually pull back. Because that $80, you can see it right there, how it just sets up there between 80 and 90. And then you're seeing it pull up there, and it couldn't quite make it during this earnings period. But now we're over. Again, you have a positive 50-day, a positive 200-day. So it's clear 2025 may be a very good year for financials because they're getting better. The higher-end consumer is doing very well. Things like Schwab, things like Fidelity, things like Interactive Broker, they're doing very well. What's not doing well are the lower-end consumers and the regional banks. That's where you might have some problems. But I like the bank. And if you want to follow earnings, Earnings Hub, it's the best earnings out there. We've got Taiwan Semi coming up tomorrow. We have tomorrow's Wednesday. ASML coming up tomorrow. US Bank, CSX. We've got Discover Financial. You've got Procter. You've got SL Green, PLD, Prologis. You got Taiwan Semi, Blackstone on Thursday. You've got Netflix after the bell. I like Netflix. We can look at the expectations. The earnings are in 2 days. Their revenue expected to be 9.76. Last time they reported 9.53. 9.56. So they're expected to grow their revenue. Earnings per share estimate, $5.11. Earnings per share last time they reported $4.88 per share. So if they meet this, great. If they don't, buy the pullback. This is a great company that is going to be firing on all cylinders. I like this one. I still own this one. I'm looking to add to it. So you got Procter & Gamble, on Friday. You've got AXP, which is American Express, and Ally Bank and Regions, Schlumberger, which is the oil industry. So you've got a lot of earnings coming up that you can play. So let's talk about some socials. Ryan, he says that the ads aren't a problem on Spotify. I did release a commercial-free newsletter, podcast yesterday, commercial-free. So this is the way it's coming. It's coming in your email. You can use the app to actually play it on Substack. Right now, that's the way that it's doing. I'm going to try and do some other things, some other technicals where you can play it in other platforms. But right now, the only commercial-free podcast is here for paid subscribers, and it just plays, and you can AirPlay this to your TV if you watch it on your TV like I do. The quality's okay. I tested it out yesterday. I've tested it out before, but it does come there, and then I include the notes down below. And again, if you want the free version, I'm not changing anything. The free version of the newsletter comes every day. It just doesn't include that commercial-free podcast. So you do have some ads. I don't include the ads or anything like that, but you do have the exact same pod notes. So that's what I'm doing on the paid newsletter right now. So Ryan, if you're a paid newsletter subscriber, you won't get the ads. But if you are not a paid newsletter subscriber and the ads don't bother you, don't worry about it. Okay. And he wants to know about YOUU. Stock chart looks okay. Algorithm loses you 26% versus buying and holding makes you 35%. And it's because of this downturn right here. And it's been in this one. You've had some nice runs here. I'm going to be more interested. Yeah, it's a rather new stock. We don't have a 200-day. Typically, I don't like to trade these. And on a weekly, the RSI is at 74. I would say that the run is over on this, that you want to just hold off. But let's look at some of the financials of this one. It's a strong buy in the quant. The valuation is D+. They are making money, 34. That's kind of a high PE, but their PEG ratio is only 1.1 going forward. So that's a good one. Their growth, they are growing 32% revenue year over year. Let's look at their profitability, their gross profit margin, 63%. This is an application software. Software, it's coming back a little bit. I don't know that I necessarily love it at this price. If we look at Wall Street, there's 8 analysts that cover it, and their average price target is 27, and you're trading at 34. So I don't know when those analysts came out about it, but if we look at the summary, let's look at the Seeking Alpha analysts. Rating history, it looks like it's been a buy since it was at 29. You can see this Mountainside Research, they started covering it here in April. You changed day 81%, S&P changed. I mean, he's up 81% on that one. He's up 18% on that one. This particular one, Grassroots, covered it, 20% up. And you can read all the articles on these. This particular one, Tech and Growth, up 76%. This one said hold back here, and it's up 79%. So they are up on it. I just don't know enough about it. But if it's software and it's in your kind of niche, the bulls say Clear has strong growth and prudent financial management and modest valuation, has good momentum, growing revenues, adding members, and successfully launching TSA PreCheck. They're pulling in serious free cash flow and buying back stocks. I mean, this is the Clear network. If you guys walk in, this is the Clear network. I don't find value in it, to be perfectly honest with you. I just don't find value in it. It's just one of those that I have 3 friends who actually subscribe to it. They love it. They're high flyers. Again, the higher end tier of the consumer is doing well. So this might do you well. Again, I can't argue that the quant has it as a strong buy. It's had it as a strong buy since 28. Even though Wall Street says that that's the price target, they've had it as a strong buy since then. Ranked in industry, let's see, number 2 out of what's number 1? Zeta. Zeta is number 1. So Zeta looks like it's done a little bit better, but it's pulling back. The strong buy from Wall Street as well. 13 analysts cover this one. This one might be a little bit, let's see, market cap 7.15 billion. What's Clear at? What's Clear's market cap? Let's see, 4.86 billion. Again, it's a small company. I mean, 4.86 billion market cap, that puts you in small caps. So it's not my thing, Ryan, but I can't argue against it as long as they have free cash flow and stuff. Okay, let's talk about scans. Every morning I scan the with the 4-hour algorithm, and I look to stocks. Some that came up this morning, and they're all printed in the newsletter for free. MHO is one that came up this morning. You have an entry here at 167. Am I buying it? Probably not, because that 172 looks like resistance. Now, you have reset everything on this chart. If we go over and look at the weekly, have you reset? No. MACD is still high, and I just don't trust that 167 isn't resistance. So I wouldn't necessarily buy it. Party favorite and alpha pick. MHO is an alpha pick, and Powell is an alpha pick. This one gets another leg up. This one, the MACD super high. RSI at 76, 78, and it's still moving up. Okay, Bollinger Bands have seemed to cinch up a little bit, even with the stock moving up. MACD still super high. If we go and look at it weekly on this one, the actual MACD and everything is out of control crazy. That trend line right there would provide me an opportunity to buy. Because what do we touch since the October lows? We touch it once, we touch it twice, we touch it 3 times. That is a pretty secure trend line. Now, if you break through there, you sell out. But with an RSI on the weekly at 72, I mean, we can go and look at Powell. And again, it's a strong buy in the quant. I don't argue that. The valuation makes sense. Well, Wall Street, what's the price target on Wall Street? 194. You're trading at 266. That's a little bit crazy. But the valuation isn't. Their PE, 22. Again, with that kind of growth, when you look at the growth, their growth is 44% revenue growth over year. Profitability, they have 25%. That's still good. Sectors at 31%. This is just an electrical component supplier. It's an industrial. So I don't argue with it. I love it. It's in Alpha Picks. If you're interested in Alpha Picks, you see how I use all this stuff, okay? You bundle up. Bundle up. Get Alpha Picks and Seeking Alpha Premium for $159 off. $159. It's the second link here. Bundle up Seeking Alpha Premium and Alpha Picks over $150 off. It is a phenomenal limited time deal, and explains everything that you get. In-depth analysis with Seeking Alpha Premium, unlimited articles. You get screeners. And if we go over here and we use the screeners, top stocks, the PSIX has been the top stock for quite a while. It's got almost a perfect score at 4.99. How long has it been a strong buy? Well, let's look. The quant has it here at strong buy at $4.44. Where are you trading today? By the way, that was just May. So it's not like this was years ago. That was May of this year. So what, 5-6 months ago? It was at $4.44 when it turned to a strong buy. This is PSIX. But again, that's what it gets you. Premium gets you unlimited articles, powerful screeners. What does Alpha Picks get you? 2 stocks per month. You get the full research report, and you get alerts when to sell. And the Alpha Picks portfolio is phenomenal. 145% versus the S&P at 51% during the same time. So again, these are the tools that I use. It's very simple. I don't overcomplicate things. I make things super simple. Today, I hope that we're up. The Qs, we're at 926, and it looks like the Qs are up 0.13. VOO is up 0.09. I do think that the Dow is going to catch up. That's what I highlighted yesterday in this chart here. Okay, the Dow and the Russell probably need to just pony up. Because when you look at this year to date, you look at the year to date of the Dow and the IWM, the Dow is up 14%. The IWM is up 11%. The Qs are up 21 and VOO is up 22. The Qs are catching up to VOO. They will meet. The Qs will outbeat them, I think, this year, because I think going into the fourth quarter, I think you have a Mag 7 reemergence specifically with NVIDIA. So that's it. I will talk to you tomorrow. I hope you guys have invested in some of those stocks that are high flyers today. If you're not invested or you want to know some other ones that may be high flyers, just sign up for the newsletter and scroll down to the bottom and go to the scans portion and then do your research on these stocks. I give you these for free. I don't charge for them. And again, I said, if you want to get Trendspider, if you want to get Seeking Alpha, if you want to get Alpha Picks, none of that matters to me if you get it. Because I want you to use the tools that you're comfortable with. If it's free tools, if it's Fidelity, if it's Schwab, if it's anything, I want you to get it. FinViz is a great free tool. Thinkorswim is a great free tool. A lot of these things. Fidelity gave me great education. It's more about you becoming comfortable. You buying these things is not going to change my life. But you buying them or learning the free tools, it may change your life. And I still like that. I still like that sales pitch. Okay. I will talk to you guys tomorrow.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.